maybe let me mention one thing in the business insurance above that. With the economic volatility, one of the things that's important is that people understand their risks and that their risks are properly covered. And one of the things that we've seen is, I think historically, a lot of buy-sell agreements that require a buyout in the event of death have been underfunded with insurance. And to whatever extent that underfunding exists, it means that the balance of the buyout is going to have to be funded with after-tax earnings plus interest. And in time when earnings aren't real predictable, and when it may be advantageous to retain capital for expansion and that sort of thing, having an underfunded risk like that, particularly if it can be covered very economically with term insurance, is a dangerous risk. And we see people paying more attention to making sure those things are covered, whether it's the risk of loss of income because of the death of a wage earner in a family situation, or whether it's the funding of a buy-sell agreement for business planning. And so you would be helping your clients if you help them make sure that their amounts of insurance are adequate for known risks. If you know they have a buyout agreement and it requires a buyout at death, which is pretty common, and you know what the valuation of the business is, you can help them make sure their agreement is up to date and reflects the correct value of the business, and along with that, that any insurance funding is up to date to meet that obligation.